most business owners think they have to paint this picture of perfection. And, I have the perspective to go, hey, look, no business is perfect. We look hard enough, we're going to find something you're not doing well. What we need to do is be honest and open about it and upfront about it, and highlight the things we do well. The worst thing is to lose trust in a transaction. So don't paint an unrealistic picture that they're going to find out during due diligence anyways isn't true. That's just going to set everybody up for failure. And a transaction is not going to get consummated like that.
When it comes to the financing, I am curious, like what you see, and surely it probably changes quite a bit depending on the size, but especially when you're working with like that successful executive who's wanting to buy their first business on the lower end, or you're doing work with internal candidates. Are you seeing a lot of seller finance, SBA? What are create some categories for our listeners as to what are some of the most common options and the different pros and cons to those?
Yeah, I'll try and hit on some of the high-level, most common ones. One that folks probably haven't heard as much about
who's buying businesses right now. We've gotten a pretty good taste on what sellers are experiencing here in 2025. Yeah. What are you seeing, feeling on the buyer side?
So in my world, and again, I'm mostly lower middle market, so my experience is going to be representative of those types of businesses and industries, and it will change as you go up and down the line. But I have three primary buyers, and I would say almost all my buyers fit into one of these three buckets. You've kind of got
Welcome to the Abundant Journey podcast, where we talk with incredible entrepreneurs who give world-class advice from their own journeys. I'm your host, Nick James, and I'm a commercial banker turned business owner, along with my co-host, Nick Aufenkamp. We want to help you grow and scale your business while not losing sight of what matters most. Join us as we learn from the experts what it takes to grow $1 million business. What's going on, everybody, and welcome back to another episode of the Abundant Journey podcast, as we are doing our best to sprint toward 100 episodes. Thank you for hanging out with us. As always, I'm Nick James, hanging out with Nick Aufenkamp. Nick, how are you, man?
Hey, I'm doing very well. And as always, super excited about our guest today. I'll let you go ahead and bring him in.
Yeah, so we got James Purgason hanging out with us today. James is a Tennessee man, and I'm not sure if that's where you started, but we're going to dive into that, James. How are you?
I'm doing great. How are you guys?
Man, it's great to have you on.
Thank you. It's great to be here. I could talk business all day.
I hear that. Well, you were gracious enough to receive a cold call from myself as I was looking at a business in Tennessee, and we just started talking and getting along. And then all of a sudden, both with our backgrounds, mine in banking, yours in CPA world and accounting and business advising, holy cow, I was like, all right, we got to have a deeper conversation. Let's go ahead and record it. So thank you for being gracious enough.
Thanks for listening. Not everybody finds my conversations interesting.
Well, I was geeking out on it too, so maybe it was meant to be.
Well, Nick, real quick, do you know what a CPA spouse does when they can't sleep?
No.
They ask their significant other what they did at work today, and it works every time. Out like a light. So, yeah. You might be the weird one.
That's right. You're probably right. And Nick would agree with that.
I was just going to ask if that works for friends as well. Like the next time I'm having a hard time falling asleep, can I call you up? Or?
In a party full of actuaries, maybe I'm the cool guy.
And that's right.
That's very true.
Of everybody else representative of normal society, rarely are we the cool people.
But the most needed. I will say that as a banker, the most needed.
Oh, that's kind of you to say.
Oh man. Well, let's dive in. So I want to dive into your story, and we're going to go back as far as you want. Currently, you own and operate your business, New South Transaction Advisory. Tell us a little bit about what you're doing a day in the life today, and then maybe we'll bounce back to some of your journey and what got you there.
Sure. Yeah. I mean, the bulk of my role today is really guiding business owners through a successful exit on the sell side. And a lot of times that looks like family-run business. Maybe you're on the second or third generation, but there's not someone internally with the desire to come take that over. And so for the first time ever, they're looking to an external market and often feel a little bit intimidated about how to tackle that. And so usually that's when I get introduced, usually by a trusted banker, trusted attorney, trusted CPA, and they'll bring me in and really I arm them with information and start with, what does success look like 5 to 10 years from now for you? And then we kind of walk through all the options, a transaction being one of those, but also I do a fair bit of consulting about internal buyouts, identifying employees internally, and maybe working them through a management training program to get them to a space where they may have the ability to take that over one day. And sometimes it's not an exit. Sometimes it's bringing in an outside CEO and leading a search for that and going into a more passive role. So we really, while transaction advisory is probably what we're most known for, we start every initial meeting with really defining what success looks like for them and working backwards to ensure a transaction is a good fit.
Yeah.
So I do a lot of consulting around that. Oftentimes that will lead to an engagement for a brokerage transaction, and I'll represent them through the entire process, much like a traditional investment banker would. And then on the buy side, it ranges from guiding on due diligence and kind of being high level oversight and just helping them identify risks and ways to mitigate those risks, to actually performing a good bit of financial due diligence and even some operational. And so, yeah, that's the bulk of what I do today, is advising around exits or acquisitions and capital events.
Yeah. We're gonna have a robust conversation, I think, a little bit later on some of the nuts and bolts behind this. I think it's going to be really helpful for our listeners. One of the things before we jump into your early days, I don't want to gloss over is that I think a lot of times business owners, they start to think succession planning, they start to think exit strategy, and they think, well, I need to be old. But you mentioned, hey, what's the game plan 5 to 10 years from now? So what I'm hearing from you even is that there's not necessarily a bad time to have a conversation with somebody like you where, you start that planning early on. It isn't, well, I'm ready to sell in the next 6 months. Let's have a conversation and find somebody. Wouldn't you agree?
Oh, absolutely. And frankly, those are the best clients because honestly, sometimes we're preparing for 2 to 4 years and executing a plan to go to market. If they're confident a transaction's where they want to be, well, we're going to look at the market and see what does the market value in this industry and try to build the business in a way that highlights the market values. So, for instance, in like a tech company, the acquisition of user data is really valuable and monetizable, but that's going to have a completely different valuation methodology than, say, a traditional manufacturer that's going to be more of like an EBITDA multiple. And so, yeah, it's really identifying the unique characteristics of their business or industry, trying to highlight their strengths and mitigate their weaknesses. And that's really fun because you get to see the fruits of that labor when you bring it to market and you kind of see the reaction.
Yeah.
Yeah, I love that. I'm really curious just how you got into this world. It's such an interesting niche. And so like, was this at 5 years old, you knew that you wanted to help business owners with these exits and transactions? All right. So how did this emerge?
I kind of have fallen into a lot of different things. And if I had to say a skill I lack is probably long-term personal planning in terms of mapping out, here's where I want to be in 20 years, here's the path. But what I've always been good at is when I'm not burdened by that, I'm able to look at every opportunity as it comes and kind of look at it as it is. And things that interest me, I'm drawn to. I think, one thing Nick and I really connected on when we spoke was, I think we both commented that while we both appreciate money and money is necessary, neither of us are necessarily driven by the financial outcome. Yeah. It's more about can I do something that's hard and solve a problem that someone else is struggling with? Frankly, that's what my ego lives off of. I like being the fireman. And sometimes that's not a good trait, but in the service business, it tends to do good and be beneficial for everybody. And I've just found, my whole business career, I've been very lucky to work with a lot of really just great people, have high integrity, and we operate on a lot of trust. And I think one of the remarkable things about getting into this is I found when you stop thinking about what's in it for you and how you're going to get compensated, that kind of always figures itself out. Frankly, if you add value to people, they want to add value to you and they want to keep you around. And so my mentality was always not, can I sell this project today and generate revenue? I just always, and luckily I didn't have to be taught this. This was just a natural inclination. I always looked at it as, if I solidify this relationship today, then over 20 years, we're both going to do incredibly well. Mm-hmm. If I'm giving good advice that they benefit from, they're going to include me on everything they do. And if they're winning, I'm going to win too. It's just by default. If I'm giving good advice, they benefit, I'm going to benefit. People don't fire people that don't add value.
I love that. And that's such a cool trait to recognize within yourself, of being the fireman, and the picture there of that. When there's a fire in a building, there's some people that they're wired to run toward it and help, while others are wired to run away. And so I suppose to zoom in a little bit on, as you look around at opportunities and saw this, was there a real clear fire that you were seeing as you were talking with business owners when it came to exits, where you're like, oh, I got to run toward that?
Yeah, so it started in my CPA career, in that, my bread and butter, my typical client base was lower middle market. And so that's kind of loosely defined as companies with top line revenues, 5 to 25 million. So think of, not a small business anymore, but not a huge, maybe they got a regional customer base, or maybe in a larger city, they're one or two or three major players in that industry. And what I found was those types of companies would run across 3 or 4 sophisticated financial issues a year, right? That they didn't necessarily feel they had in-house expertise or had the confidence to tackle that on their own. And I just found I did really well with those closely knit ownership groups that didn't have fully built out C-suites. And it wasn't that I was smarter than anyone. I just had the perspective to see, well, I've got 1,000 clients. Somebody's encountered this problem before. And so if I had heard someone else had solved it, I was just always listening because I was naturally interested in, well, how'd you overcome this? Well, then I'd beg, borrow, and steal something from this client and apply it to this client. And it really was driven out of a natural desire and interest just to understand. I've never been the guy that you tell, well, the sky's blue, and I just go, okay, well, it is what it is. Kind of like, well, why is it blue? And what makes it that way? Why is it sometimes this shade blue? And so, when I hear business problems, I just always dig, because I'm naturally curious as to what the issue is. And what I found my career afforded me was every consultant's dream. I had a database of 20,000 successful clients across the firms, and representative of varying different industries. And I had their most intimate financial data. Now, while I wouldn't use that for other people or share it, I could go look at it and determine benchmarking and, what drives operational efficiencies. Yeah. And I think as I got a better handle on accounting, what it allowed me to do is when I read financials, it kind of reads a story to me now of how the business is operating. And so I can quickly marry that narrative that the financials are giving me with what the owner or the executive team is telling me about their business. And then it becomes quick to identify whether there's a disconnect. And then it's immediately, okay, is the disconnect, the owners don't fully understand their financials and what it's telling them, or is there an issue with their underlying financials?
Yeah.
And so then that again starts that natural curiosity path of, well, where's it off and why?
Yeah.
And I think just being an inquisitive mind, I got to learn, people paid me to learn from them. It was kind of a beautiful career and benefits that I never would have anticipated when I first got in. I mean, I started out doing tax returns, sitting in a back room, cranking out 90 hours a week, punching numbers into software.
Yeah. I love that. That's probably why you and I get along so well. And really one of the baselines of starting this podcast, because as a banker, I was getting paid to go sit in front of really successful business owners and get to ask them questions for an hour. And it would serve them because I was trying to find a solution that, that they needed. They had needs that maybe weren't getting currently met. However, I was getting paid to learn and just absorb. And so within that, let's dive there a little bit further. And I want to bounce to the financial side and kind of the financial literacy and maybe some of the fears that people have around that, because I think that's important. Before we do that though, talk a little bit further about that curious mind. How does that help even business owners? You and I have both shared on our own journeys that aided us, but why is that essential for a business owner as they're looking to grow, looking to scale, having that curious, teachable mind?
Well, I think it's because as a business owner, you're the last stop for every aspect of your organization. And as that organization grows, you're juggling increasing responsibilities. And essentially, you are the in-house expert on just about everything related to that business. Mm-hmm. And that can be intimidating. It can be very rewarding. It can certainly help people grow and expand their skill sets. But also, I think they realize there are times when they need a little help and guidance, or even just an ear to bounce ideas off of, because they don't want to look weak inside their own organizations. And, I think it's a real stigma they have, that asking questions or implying you don't fully understand something. Well, I think there's a societal problem with it, implying that's weakness. And I just have never viewed curiosity as weakness. Intelligent questions only better your understanding and either convince you're headed down the right path or tell you need to course correct pretty quickly. So with that, we're in an age where we're inundated with data, right? Data is everywhere if you go look for it. And data is great for helping you make informed decisions. But when we don't understand the data, what it's telling us or how it's derived, well, then it's just numbers on paper. You don't really know what to do with it. So part of that, again, is I think a lot of people just have a natural tendency to not trust their instincts, or for fear of looking stupid or asking a dumb question. And I've just found that trait has been rewarded far more in business and in every aspect than someone who's afraid to do so. And if anything, remove that stigma, get them curious. They're going to build confidence as they understand, I am smart enough to wrap my head around this. And I tell you, this may sound arrogant, but I developed pretty early on in my career a mentality that I was smart enough to understand just about anything if I was given the right information. I could make it make sense. And so if I didn't understand something, I wasn't going to stop asking questions, because either I was confident either the information wasn't being conveyed appropriately and something was missing, which is why it made it not make sense, or that the information was just wrong or they weren't considering other aspects. And that came from watching a very successful client of mine navigate some very precarious situations, which typically you'd have a team of $800 an hour lawyers helping you, and he kind of did it himself. And it was shocking to me that he had the confidence to do so, but he was right. And he was confident because he had done the work to understand it himself. And he went and did his own research. And that was a pivotal learning point for me. And I think that's what really helped solidify that curiosity and say, actually, this gets rewarded and ultimately will only make me a better advisor, a better business owner, better partner, etc.
I love the way you put it a moment ago, where you were talking about like how you read the financials of a business much like you're reading a story, or the finances tell the narrative of the business, which I think is awesome, because connected to what you just said, for most business owners, they open up their books and it's just an intimidating mess of income and profits and losses. And, they've got so many other things day to day operationally to worry about that it just feels like this massive burden. There can be so much data, not knowing how to make sense of it. And so I'd love to hear you even talk a bit more about, okay, what kind of stories emerge from those financials once you've been really familiarized with them and kind of pull back the veil?
Yeah, I'll give you a prime example, and it made me look like a hero, which I didn't hate, but it was really some luck, right? And so I had a contractor client, and I have fairly deep understanding of construction industry, subcontractors, large trade contractors, developers, etc. I had served a lot of those as a tax CPA for a long time. So I kind of knew how most construction companies operated. And it was actually one of my partner's clients called him up and he said, I don't know what's going on. I'm doing the best revenue I've ever done, but yet I'm burning through cash. Mm-hmm. And first thing I said was, and this is just through hearing pain stories from other clients, was, he said, I've got a new project estimator. And so every time I hear a new project estimator, I immediately think, look, a lazy salesman discounts their products to get the sale done. And so I immediately go to check his margin on the last, check his budget to actuals on the jobs his new estimator bid out, because it was within the last 6 months. And I said, I bet he's not getting enough overhead and profit allocation. And so typically on most construction contracts in the commercial world, it's, a very typical way to bid that out would be cost plus maybe it might be, and then overhead and profit. And they'll just lump that into one bucket, and they might put 6% overhead and profit. So we think contractor costs $20 million, we'll charge you $26 million, that's 6% overhead and profit, or $20,600,000. And that's to cover the GC's overhead and give them their profit incentive. That's the easiest thing to immediately take away, right? Because it's kind of arbitrary. It's not based on anything actual. It's just more of a benchmarking. And hey, we're in business to make money. We want to make money. And so we were quickly just able to identify, and it was just lucky it was my first guess, but I kind of just start with, what's the most common reason for this? What would be happening in the real world to cause this? And you just kind of think through it logically. And I'd have to say my superpower, if anything, is being able to think through things logically and translate financial data to what's happening operationally. I don't overcomplicate it. I mean, usually the answer is fairly simple. And I think we tend to assume it's an incredibly complicated idea. And that can be a barrier to solving the problem as well.
Why do you think, James, why do you think that is? Maybe twofold question here. One, why do we overcomplicate it? And two, how can we simplify it as business owners? How can you simplify these problems and not be intimidated by them?
Oh man, look, I can really only tell you my way. And part of it I think is just luck. Part of it is I've always been this way, and probably deficient in some other areas. Right? I tell you, my spouse doesn't appreciate that I'm very logical all the time. Sometimes there are times that isn't that helpful. But I've just kind of always been a very logical. My natural tendency was to think black and white, and for every action, there's an equal and opposite reaction, right? I remember as a little kid thinking that way. My parents would tell me I was always kind of a little engineer. It was either fact or fiction. There was no in between. And it's only as I got older, I realized, okay, not everybody's that way. And I realized I could use that. That was kind of my differentiator internally amongst other CPAs, is they tended to be really good at the details, but struggled to see the big picture. And I was exactly opposite. So I was surrounded by people that really masked my weaknesses, but I had a strength that a lot of those folks struggled to have. And so together, we became a really good team. But I had to learn how to be really detail-oriented because I was always way too big picture. So, I think if anything, the advice is be honest about your strengths and weaknesses and do your best to surround yourself with those that mask your weaknesses and highlight your strengths, and vice versa. One of the most frustrating things is having a partner that thinks differently from you. But if you can swallow your pride and your ego and truly listen, you'll realize sometimes they bring a unique perspective that you would have never considered that's really valuable. Mm-hmm. So while it's frustrating, it's always easier to just march forward and do what I want to do, plow ahead because I think it's right. Those diverse perspectives can be really helpful sometimes and save you a lot of painful lessons.
I love that, man. That having that diversity of thought, it seems like life would be easier if everybody just thought and acted and got on board with exactly what I've got in mind and planned. But it's so right to have people that are pushing on each other, but all have the same aims in mind, right? Wanting, whether that's the business to be successful or wanting to move toward an exit. We can go a long way with people when we at least have a similar orientation and we're all trying to figure out the best way to get there.
When people feel like you'll listen to them, and I may not always agree with you, but just like when someone disagrees with me, I don't mind that if they provide substantive information as to why, like it's a thoughtful, intelligent disagreement. Well, then I can interpret that and either challenge certain aspects or go, oh, that's something I hadn't considered. Let me contemplate that now. And so really, it's our pride, I think, that gets in the way a lot of times. And I'm certainly victim of it as well, especially younger in my career. I thought I had to be right or else I would be viewed as not smart enough. Then I realized, boy, a lot of trust comes from just approaching it I've told young accountants this many times. I never lost a client in my career by making a mistake when I called and made sure I made them aware of the mistake before they were. And owned up to it and just said, hey, I'm going to make it right. However, I've seen plenty of people lose clients who make a mistake, don't follow up, don't call. And because out of shame or embarrassment, or their ego won't let them have that conversation and go, hey, look, I'm not perfect. I messed this up, but I'm going to make it right. That's when you lose clients and you lose trust. But I found it to be a trust building exercise more than anything. Saying I'm sorry or I made a mistake is a pretty powerful statement.
Yeah.
And I think it's lacking in today's age in all aspects of society. I don't know why we feel, and I've certainly felt it before as well, it's kind of anxiety inducing until you do it enough and realize, okay, people don't think I'm an idiot and they make mistakes too.
Yeah. That reminds me of a great book by a guy named Ryan Holiday titled Ego is the Enemy. And it's so true what you're putting your finger on there in the way that our egos can hold us back.
I'll spend my whole life battling my ego, right? Some of it's there for self-preservation purposes and is necessary, but I think just like every trait, nothing's absolutely good or absolutely bad, right? There are times that trait can be a positive, and there are times that trait can be a negative.
Yeah. Well, I'd love to talk about when you have a business owner that does approach you and they say, "Hey, James, I'm thinking about selling." Where does that conversation go? What are some of the first things that you want to go through with that business owner as they broach that question with you?
Yeah, well, first I want to understand how they arrived at that decision. Again, it starts with what's your stated end goal? And I want to understand how much thought or analysis they put into that decision, because a lot of people think that's their only option. Right. And so you don't want to put someone in a transaction scenario that is a little bit uneasy about potentially selling. You kind of want them committed to that process before you start it. Otherwise, there's going to be a lot of emotions and a lot of disappointment on a lot of sides, right? Buyer sides, they're going to feel they wasted their time. Seller side might feel guilty. And you don't ever want to put an agreement like that in front of someone that you don't feel is 100% confident in what they're doing. So a lot of it on the front end is really trying to do, it's almost like a counseling session to really just get behind the thought process, understand what led them there, and just maybe offer up some challenging questions to see how confident or firm they are in that position. And so, more than anything, I'm just trying to gain confidence in what they've looked at to arrive at that decision, and whether there's some different perspectives they haven't considered that maybe we should talk about first before we dive into a transaction. But then, that can be anywhere from 5 minutes to an hour, depending on what's going on. And then if it feels pretty confident, they've looked at a transaction or they've looked at all their options, they've done pretty good amount of due diligence, seem to have a good understanding from my perspective as to the pros and cons of all the different strategies. Then we start talking. It's usually, hey, what is the market? What does a transaction look like? Again, they've heard this exists, but they probably don't know anyone or directly, or maybe they know one or two people that have been through a successful transaction if they're an operator. And so, again, a lot of them are approaching it from kind of this wide-eyed, it's almost like a kid in a candy store, the possibility list, but also it's really scary at the same time. And so you're just kind of holding their hand and walking them through. And I think when they understand how logical it is and how the process is pretty well defined, if anything, I think that seems to ease their fears. Okay, these people have done this before. This is, and I really just sit there. They'll come up and start fireballing questions about, well, what happens to my GM if I've had that conversation 30, 40 times. So I think it adds confidence to them when I'm able to answer it with detail and kind of say, well, here's the varying ways I've seen that handled. And they go, oh, okay, people have thought through this. That's comforting.
Yeah, right.
I am curious, just for my own sake, as you engage these business owners early on, have you got maybe a temperature gauge on, do business owners typically think their business is worth less, more, or about the same than what it is actually worth?
So my opinion on that has changed in the last 3 years. I would say 3 years ago, it was far more common for folks to overvalue their business. But in the last 3 years, and I can't explain it really, but there's been a marked difference in anxiety and fear. I think COVID scared a lot of people. and made them realize how exposed maybe they were. And seems to accelerate it. But if anything, the last 3 transactions, I've had to talk people into going up on their expectations, which is kind of that's a conversation I haven't had as many times.
Yeah. But I would imagine that's kind of a refreshing problem to have. Like most people aren't too upset when you kind of tell them that, hey, actually, I think it's worth a bit more than.
It certainly gives you more confidence you can deliver success, right?
Yeah.
And success is unique to each individual. So me as the broker, I want to ensure I'm putting myself in a situation where I'm going to leave a raving fan, not, I never want anybody when my name comes up to go, oh, he did fine. I mean, like he did what he was supposed to do, but I think that's all he did. And I've been that way my whole career. And I am only in the position I'm in today because of the work I've done over the last 20 years. And I'm very cognizant of that, and can take 20 years to build a reputation and a day to tear it down. And I think about that on almost every project, because I think about after this transaction, when someone approaches them and asks about their experience, how do I want them to convey that?
Yeah.
So it's very important to me that I can meet the goals of my client, because it's not fun to work with. It's not fun on either side to have a client that has an expectation you can't meet,
right? And
just kind of be plodding along. That doesn't feel good, and I'd rather avoid that situation than anything.
Yeah. And I think that we could come back to that as well with how to set appropriate expectations. Maybe it connects with this next question that I've got of when you have these initial conversations with business owners and you're doing a lot of the education, certainly the valuation of their business is a piece of that. But what are some of the other surprises in the selling process that you see you kind of have to walk owners through that they're not anticipating?
Oh, it's almost different every transaction. Like there's no common thread, because each transaction, I'd say 70% of transactions are mostly the same, but the 30% that is unique is almost totally unique to you.
Sure. It just,
and industry driven, but it's as little as, I've had a GM for 6 years. We go to market, and then 6 months in, they fire him. And, now I'm on the market with no GM, and I've been talking to buyers for 6 months, telling them we've got a stable. And, I don't like surprises. I'd put it that way. I like to know ahead of time so I can formulate a detailed understanding, because I don't like not having answers to questions I know people will have, right? Yeah. When I hop on the call and tell them what's happened, I need to sound prepared and intelligent about how it happened, why it happened. We didn't just make this arbitrarily. Here's our plan to get it in place back on the road, but we needed to do it because of X, Y, Z. All the way down to, going through due diligence, you realize there's 2 or 3 tax filings they've never made. And now I've got to go negotiate with tax authorities for a clearance so we can close on a transaction without trying to get nailed. And then oftentimes it truly is out of just ignorance. I mean, the business owners today, the jurisdictions, even a restaurant. I was doing a restaurant deal, and there were 12 different permits or licenses they operated under. And it was kind of like, holy cow, how do you even know half the time? How do you
wrap your head around all that?
Everything is supposed to be registered with. And so that stuff comes up a lot during due diligence, but you also find a lot of the spider webs in the closets. Yeah. You start going back through historical financials and you just find stuff that doesn't make sense. You start asking questions. You just kind of find out a lot of the where the bones are buried, I guess.
Sure.
And I think most business owners think they have to paint this picture of perfection. And, I have the perspective to go, hey, look, no business is perfect. And by the way, that was my job, was to go find where you're not perfect, right?
Yeah.
So we look hard enough, we're going to find something you're not doing well. What we need to do is be honest and open about it and upfront about it, and highlight the things we do well. But the worst thing is to lose trust in a transaction. Mm-hmm. So don't paint an unrealistic picture that they're going to find out during due diligence anyways isn't true. Like that's just going to set everybody up for failure. And a transaction is not going to get consummated like that. I mean, when you're talking the dollars people are spending, you lose trust, because a lot of this is due diligence validates a lot of that, but there's still a lot of this that's done on trust. I mean, even Nick, as a banker, when you're underwriting a loan, I mean, you can have all the data in the world, but you're still looking a lot at the intangibles, like who is the owner? What do we think of his business acumen? Well, how does he operate his business? Yep. What kind of trust do we put in him? There's a lot of those intangible factors too.
Mm-hmm.
Yeah.
Well, I think there's the appearance of all these checks and balances in the financial system. And there are, to an extent, but also business is done on a lot of trust.
Yeah. Yep. No, it really is. Absolutely. And I hear that continually through this conversation. There's that trust piece. They need to trust you, that you have their best interest in mind as you're trying to advise them and do right by them, and you want to see them succeed. There's trust as a seller that you are coming to the table and you are actually selling what you say you're selling. And we've heard horror stories
value, not just
that's right.
Emails back and forth.
That's right. Well, and I think too, what does that look like once the post sale? But interestingly enough, we haven't spent much time talking about the buyer side of transactions. Yeah. And I think trust is equally important there. Talk a little bit about the buying side, kind of go with it where you want. But I'm just curious, from being boots on the ground as you are, who's buying businesses right now? We've gotten a pretty good taste on what sellers are experiencing, here in 2025. Yeah. What are you seeing, feeling on the buyer side?
So in my world, and again, I'm mostly lower middle market. So my experience is going to be representative of those types of businesses and industries, and it will change as you go up and down the line. But I have three primary buyers, and I would say almost all my buyers fit into one of these three buckets. You've kind of got the successful executive that probably worked a good bit of their career, moved up through a large organization, and has decided, hey, I think I want to go try something on my own. Right. And that's usually about the 35 to 45-year-old who's done pretty well and kind of has this midlife, not crisis, but kind of like, okay, this was good experience, but I'm not sure this is where I want to spend the rest of my life, and I want a little more autonomy, and I want to prove to myself, can I do this? So that's one aspect, and that's usually the lower end of the deals, because they're just entering the market. My most typical buyer is going to be what I'd call a small private equity group or small investment group. And that's going to be a regional private equity firm that's usually doing deals $5 to $10 million in total deal value. And they're looking to typically look at bolt-on acquisitions. They're probably in specific industries where they have kind of a platform company, and they're looking up and down that supply chain to consolidate that margin, right? And so they're actively going out and seeking targets that meet that criteria. And then lastly, you have what I call your strategic buyers, and that's going to be typically a larger competitor, someone upstream on maybe you're the part of their supply chain and they're upstream for you and they're much bigger. Or even you might have family offices that are in certain industries and are looking for bolt-ons and are kind of running a operating company portfolio much like a small private equity group would. That would be the bulk of my typical buyers, outside of finding an internal candidate for transition. So that's also, I'd say that's probably 30% of my transactions end up being, hey, we just need to accommodate, we've identified the person. James, you've got to help us figure out how to get the money transacted and figure out a deal that makes sense for both sides. And in that scenario, I'm really kind of looking at it from a buyer and seller standpoint, because I know whatever I layer on the business for the acquisition, the buyer is going to have to be utilizing those cash flows to fund that repayment. And so you're kind of running, you're trying to find this perfect mix of fair value for the seller, but affordable for the buyer. Because usually in that situation, a buyer's not able to come to the table with much of a down payment, if any at all. And there's a significant amount of goodwill being extended. But yeah, those are my typical buyers. And in those scenarios, you know, the strategic buyers, the smaller private equity, or I'll say the strategic buyers are typically going to have an acquisitions department, and I'm communicating directly with them, but they're typically not bringing in much outside counsel, outside of legal, and maybe a quality of earnings report or something from a CPA firm. The smaller private equity groups, sometimes they'll bring me in for some buy-side due diligence, but they're typically fairly seasoned M&A executives, and so are pretty competent to do a lot of the heavy lifting themselves. If anything, I'm just giving them high-level bullet points, or in really complicated, like if a company derives revenue in a financially complicated way, or there's a significant timing delay, trying to figure out how to overcome those issues in a transaction. But typically they'll be running due diligence kind of themselves. Most of my buy-side due diligence work comes from the corporate executive who's retiring, or maybe someone who had a small business, exited, and now they're looking for their next round. That's kind of my typical buy-side client.
And when it comes to the financing, I am curious, like what you see, and surely it probably changes quite a bit depending on the size, but especially when you're working with like that successful executive who's wanting to buy their first business on the lower end, or you're doing work with internal candidates. Are you seeing a lot of seller finance, SBA? What are I guess create some categories for our listeners as to what are some of the most common options and the different pros and cons to those?
Yeah, I'll try and hit on some of the high-level, most common ones. One that folks probably haven't heard as much about, and you'll see it's real popular in the franchise world. The franchise, the folks selling the franchise licenses have gotten pretty well versed on the rollover as a business startup. And that's where you can use say you're an executive at Procter & Gamble, 45, you got $1 million saved up in your 401k. That's probably the bulk of your liquidity or marketable assets. And so they're using their 401k to purchase the franchise or business. Now, there are some unique tax characteristics you have to put in place, because as if you're buying the business with your retirement funds, remember those retirement funds are tax sheltered until you withdraw them. Mm-hmm. So you don't want to take an early distribution, so if you had $1 million, maybe you got $600,000 left after paying penalties and tax on an early distribution. Well, that really cuts into your investment potential.
Big time. Yeah.
Yeah. So there's this thing called rollover as a business startup. And there's a rule that if you use retirement plan assets, you can't benefit directly from those assets. Otherwise, it's basically just a distribution. You're just adding an extra step. But and I don't want to get too technical, but I'll give you the high level. If you purchase it in a C corporation is allowed. So you purchase the stock of the entity of C Corp, and you would use your retirement plan assets to buy the stock of that C corporation. That creates a distinct and separate entity, separate from yourself.
Yeah.
But it's actually your 401k is the owner of the stock, not you individually.
Okay.
And you've got to be really careful with the rules about, you can't take a distribution personally. You have to send profit distributions to your 401k. right? Because it's the owner. Now you can take a salary, but again, there's to avoid manipulation around overcompensating. You just got to be a fair market salary. You've got to return those services. Put it this way, the IRS is highly incentivized to convert that to a distribution. And so it is specifically provided for in the code. It's not a workaround, but there are a lot of rules surrounding it. And I would encourage anyone that uses that. It's a great tool, but do it in conjunction with a CPA or attorney who understands those guidelines, because you can really trip yourself up. SBA is a very common lending tool. Nick could talk more intelligently about it than I, but I've kind of always viewed SBA as when a deal struggles to get conventionally financed because of the borrower, but not because of the deal itself. SBA can usually be a great bridge for it. And really that's what it does. That's what it exists to do. It says, hey, how do we get capital to those who will utilize it and invest it, right? Yeah. And so it serves that purpose and it does it well. And especially when you got, I'm a veteran, so I'm passionate about service-disabled veterans, and SBA has a lot of preferred lending programs for minority-owned businesses, veteran-owned businesses, et cetera. Conventional is usually always the preferred route, but in today's environment has become a little more prohibitive. I know in the real estate world, I used to get 80-20 financing, 80% financing, 20% down. Now that's probably 70-30, 65-35. And on the operating business side, maybe I was getting 75-25, 70-30, probably pre-COVID, and maybe 2 years after COVID, it got pretty aggressive again. But in today's market, what, Nick, 60-40, 65-35 is probably the best you can expect from a conventional lender in a business acquisition. So that makes the down payment the barrier to entry, right? Because on a $5 million business, 35% down, that's a significant chunk. Yeah. And so you got to have liquid assets to do that. And so sometimes we're helping to bridge that gap with seller financing too. Obviously, as a business broker, I don't love seller financing because we've transferred all the upside, but none of the risk. We're still holding the note. We're relying on them for repayment. And if we have to go collateralize that note, just like the bank, we don't want to have to do that because we're likely taking over a worse business than we
selling. Yeah.
And so we're taking over an asset that has less value likely than it did, and we're going to have to do the work to bring that value back up. But it is, and I'd say in today's market, it's almost become a necessary tool. And especially the smaller the deal, the more creative you have to be and open-minded into getting it funded. And that's just frankly the case. Because most people don't have $1 million sitting in their bank account to go execute a $5 million deal, right? And that's the primary barrier is really qualifying buyers financially. So I talk with bankers a lot.
That's good.
You've got hard money lending that can be a lot of people refer to that as mezzanine financing or bridging that gap between the debt and equity. Say a conventional lender's offering you 65-35, you've only got 20% down. You might look at a mezzanine lender to fill that gap between the bank and what you've got as a down payment. But again, they're going to take their pound of flesh too. And I would say, it's kind of like subprime cash loan lending. It serves a place in the market. There's clearly a need for it, but it's probably overutilized and should only be utilized in an emergency scenario. And two, that always makes you think as a broker, you never want to feel like you're setting someone up for failure either, that you're just overburdening them with debt, and they may not be sophisticated enough to really understand all the implications. And, you just want them to feel like if they're signing an agreement like that, they understand exactly what they're signing, because while it serves a need, you're going to pay for it. There's a reason they exist and they make money.
Yeah. No, that's a good caution there. And I think you're right. I mean, everything you're saying from a banker perspective, I've seen as well. And so there's a lot of different options out there. As we transition here, James, toward, the way we always kind of wrap up the show on bigger picture purpose behind what you've worked on. Maybe one last question before we shift here. I'm just curious. I'm thinking about our audience, the business owner who's grinding, as you mentioned early on in the show here. So many people are just trying to survive, right? They're just trying to get to the next day, the next client, the next sale. They're putting out fires. What is maybe maybe just speak wisdom to that listener today of, hey, when is a good time to seek somebody out like you? What are some things they can be doing today to prepare for those future plans?
Yeah, well, one of the great things about how we're compensated, typically through the success fee in a transaction, is that there's really no upfront cost. And so I say you get kind of free information and you get to do with it what you want. And in my mind, information's never a bad thing. More information is never a bad thing. It's either going to convince you of your earlier opinion and make you feel more secure in that, or it might change your thoughts and ideas and add a new perspective. So, I always encourage anybody, well, A, look, I love talking about this stuff, and B, I learn something from every client. And I love understanding what's their secret sauce, because everybody kind of has a secret sauce too, which is really cool to pick out and figure out and go, I've seen some people totally blow my minds with what they've been able to do, far more than I. But it's be curious, continue asking questions, and don't fall victim to the mentality that you're not smart enough, you're not good enough. Because frankly, the most successful business people I've ever met rarely are the most intelligent people I've ever met. I would argue tenacity is the trait that ties successful business people together. It's that they've been wrong plenty, but they just never stop trying to get it right. And that's that you won't know everything. You will make mistakes. Give yourself grace. I think we're a lot of times we're much better at extending grace to others than we are to ourselves. I'm certainly, that's been a lesson I've had to learn in my adult life. And then too, I don't know if anybody else has ever struggled with this, but when I was a young man coming out of college and out of the Army, I had this perspective of success in business came at a pretty high cost, that you either kind of had to be ruthless to get ahead, or you just had to be smarter than everybody else you were around to make it. And man, I realized we're all trying to figure it out. No one has the perfect answer. And while someone may look at my resume or your resumes and go, wow, these are successful guys in business, I could fill up 10 pages with all my failures. But those failures, I learned more from my failures, which led to success, than I did from my successes. And that's the honest truth. Because when you fail and failure is really not an option, you're going to do everything you can to avoid feeling that again. And that's a great natural motivator I've found.
Yeah, right.
So again, it's tenacity, and don't discourage yourself by thinking you're not capable, or people are just smarter than you, so you can't figure it out. You can. If you're not understanding what they're saying, they're not saying it. Usually I find when people talk over other people and they're using big terminology or fancy words, I can turn on the MBA textbook and talk with finance with those guys. But when people use that, you often find they use them incorrectly and they don't understand what they really mean, because you start asking them, okay, what specifically did you mean by that comment? Or based on what I know, I'm not sure how that correlates. And you realize a lot of times they don't even really understand it. And that's empowering too, because it's like, oh, here I was feeling intimidated. And now I realize, okay, maybe I'm onto something here.
Yeah. Yeah, it is amazing how oftentimes we kind of overcompensate to cover up our insecurities or the things that we don't know. And so your ability to sniff that out and to actually be able to lean in and say, all right, let's bring it back down to the basics and talk in human language and see if we could really get to what's going on. But these are awesome encouragements, James. I'm personally encouraged in my own business endeavors by what you've said here, and I know that our listeners will be as well. So, Nick, do you want to take us to some of those?
Some painful lessons.
Hard-won wisdom, man. That's where the best wisdom comes from. That, like you said, those failures.
And I embrace them.
Yeah,
absolutely. Well, Nick, you started to say it, but James, I'm going to hit you with our golden nugget round here. It's the same few questions we ask all of our guests, and I think the heart behind it is just to get further into your why. So here's the first one coming right at you. We talk here about the 5 F's of abundant journey and a lot of times how they work together, but I'm just going to make you pick one of these and tell me how you're working here early 2025 on getting better. So family, faith, fitness, finance, and future. Pick one of those. Tell us what you're focused on improving in this year.
I'm going to go family. Many, or you may not know this, I became a single father to 3 young children about 2.5 years ago. And I was very blessed early on in my career. I could focus on being the best professional I could be. And that was a turning point in my life where I had to the first time go, whoa, I'm grateful that I put so much time and energy into my professional career, because I think that allowed me to then buy some time back confidently. And I had, achieved enough financial security that now the goal was not, I've got to make as much as I can to provide a nest egg for the future. And the goal shifted to, I want to do work that's impactful, that I really enjoy doing. But more than anything, I have an obligation to my young children now that has become a priority I never had to consider to that degree before. And that really reshaped. I'm not going to lie, it's been hard to rewire.
Yeah.
Right. Your whole life, when that's your kind of your sole goal and focus, and it was really the only thing I was responsible for up until, it's just like go build a life for the future. And I realized what a blessing that was, to be able to do that for the first 15 years of my career, because that got me in a position where I was comfortable enough. I had built a reputation by that point that I could kind of pull back a little bit without the fear of seriously impacting my long-term professional endeavor. And so, family is and has been my focus for the last 2.5 years. And I'm never perfect at it. I think I've really struggled, probably like a lot of other people, with that work-life balance concept.
Sure.
And I think I started out thinking of it way too black and white, right? Like, okay, when I'm home, I have to be completely engaged at home. When I'm at work, and you realize life just happens. Yep. Everything kind of all happens at the same time and is always going. And I was stressing myself out by trying to follow this rigid schedule that just wasn't practical, frankly. And what I found is when I kind of embraced just, if family's a priority, then when the decision point comes, when I have to make a decision between family or work, well, that needs to lean the majority towards the family side. Doesn't mean 100% of the time I can't make an exception and handle some, because there are times stuff just has to be addressed. But I've gotten a lot better at giving myself grace about having, okay, it's not about 100% of the time or 0% of the time that you're around, you're focused on family or work. but it's about just maintaining a balance that keeps everything in some sort of harmony. And I think we're always striving for that balance. We'll never achieve it, but it's a healthy kind of look. There are times work gets a little bit more and I got to course correct, and then maybe I lean a little too much into family. It's like, well, got to get work back. So it's a constant seesaw. And I think I've just, after 20 years of trying to figure that out, I've finally given myself the grace to go, it's not that black and white.
Yeah.
And as long as you have goals and intentions that you set for both and you take actions to follow those, then neither one of them may be exactly what you hope for, but both of them should be okay.
Yeah.
Yeah.
That's really good. I think we've not heard it spoken like that. And one of the things there is a reflection and a gratitude on those years that you grinded. I think it can be really easy to throw shade at those years. And I think it can be really easy to say, I'm having to work for somebody else and I'm putting in too many hours and that's why I wanted freedom. Yeah, that can be the case, but also there's foundation that was built for you and you're able to recognize how life has changed and that's impacted with gratitude, the ability to press on forward today.
I mean, if that had happened when I was 23 at the beginning of my career, it would have been impossible to focus and have gained the knowledge I was able to gain. And so I just look at it, some of that was just dumb luck.
Yeah.
But I can look at it now and be really grateful for, wow, that afforded me an opportunity where that was my sole focus or primary focus for such a long time. It kind of allowed me to accelerate faster than some of my peers. And I would look at my peers and think, well, why aren't y'all doing this? Well, I understood it when I had kids. Oh, yeah. A ton of mental energy, even when you're not physically there.
Totally.
And so I think, if anything, it gave me a lot more empathy. I just thought they were unambitious. And now I go, whoa, okay, James, again, 20-year-old James really thought he had everything figured out.
As we all do in our 20s, I'm sure.
Yeah, and when I'm 60, I'll be saying the same about 40-year-old James.
Absolutely. No, that's good.
I just wrote, they're just unambitious. They don't want to do the work. And now I can look at it, man, that was a blessing because I see, my same peers. They're now at a different phase in life, and I'm looking at it like, boy, you got it made.
No, that's good.
Like, remember those 10 years
that's
prior?
Right. That's right. No, that's good. Well, next one here is for Golden Nuggets. Why is it important to have an abundance versus scarcity mindset? And if you're open to it, you're dealing with guys who are exiting and getting probably at times good chunks of money. And, curious of not only your own personal journey on that abundance versus scarcity mindset, but speak to maybe the difference you see in business owners as they've done the work and they're now getting rewarded.
Man, it's really cool because coming out of college, I actually wanted to go into investment banking straight out of college, but I got back from the Army in 2008 and had no idea the whole economy collapsed. So all my investment banking buddies were let go and back in grad school by 2009. So that's how I ended up in public accounting. And back then I thought it was, everything was excess and it was very driven by the acquisition of material goods or status. And what I found is throughout my career, the vast majority of business owners that have been successful, I call them the millionaire next door that you'd never know. They drive an F-150 to work. They've just worked hard for 30 years and built something of value. And they're as shocked as anybody else about the value they've created. And frankly, I think more than anything, they're humble and more is the trait I see more than anything, and grateful. And they realize that, while they had a lot to do in building that, it took a team of many people to get to the place they were. And what you'll see is they'll enter the state of reflection almost and very emotional. I think what shocked me initially was how emotional people got about their business, as emotional as their family. I mean, I've probably had, I guess 5 phone calls that going to the closing table, smiles, thrilled, and a week later I get a phone call. They're sobbing uncontrollably because they don't know what to do because their purpose has been kind of taken away from them. And I think a lot of us think it's driven by money and success financially, but it's really, look, I tell you, I've got to witness a lot of rich people being a CPA. And once you pass the stage of not having to worry about money, I would agree there is a true level of happiness or stress reduction that is achieved once you reach the level where you're not worried, can I fund or maintain my lifestyle? But every dollar after that, you don't see this massive increase in happiness or reaction. It just, it just becomes another thing. And so I quickly learned that wasn't a key motivator for a lot of people. Frankly, I think people would be shocked at how much the human capital element gets considered in a transaction, which is a good thing. Yeah. I think back in the 80s, you kind of had this reputation of the private equity groups going in and just axing as many people as they could, consolidating roles. And they developed a bad reputation, and some of that was well earned. They've gotten smart, though. They saw the data with those strategies and realized, that doesn't work as well. And what you'll find is, frankly, you'll see a lot more investment due diligence and consideration around the people that are being acquired and what kind of roles they have, what kind of people they are, how they've contributed to the success of the company. And that's really cool to be a part of those conversations.
Totally.
And then what some of the owners do to reward those long-term employees that a lot of people will never know about often blows me away. And so I think the business world is much less, it's capitalistic in terms of they want to win in their business. They want to do what they do well. And money is the scorecard for kind of validating that. But at the end of the day, the money isn't what brings them happiness or joy. It's they want to use, now it's a resource by which to go do more good. And so you'll see a lot of them get very philanthropically inclined. A lot of them will take on mentorship roles, and they get a lot of value and fulfillment out of that. I'd say even more so than the transaction.
That's awesome.
And that's been an interesting perspective I did not have as a young man that, frankly, I think has been very rewarding because, I can honestly say the people I've helped in my career solve complicated financial problems. 98% of them I believe to be good people that are worth helping. I wasn't helping people do bad things. It was helping good people do good things. And boy, that's really rewarding because you get kind of scared coming out of school. Like, am I going to be asked to do something for somebody that I may not agree with?
Sure. No, that's good. And that's a breath of fresh air because I think, the bad stories are proclaimed from the rooftop a little bit more and they're louder.
Well, they're a lot funner to write movies about.
That's true. Yeah, that's true. Well, last one here, James, and then we can wrap this thing up. Then thank you for your time today. What is a dream or goal that you have that you've not been able to make happen yet?
Oh, Nick, this is a great question because I'll tell you, I because of my life change, I've had to reassess because my goals 5 years ago were based around the kind of consolidated family, right? And that changed. So I kind of, at 38 years old, had to go through a new exercise of the future I had always thought I was working towards was now no longer the same future. And I got to be honest, that was not an easy or fun experience for someone who thought he kind of had everything figured out, right? In some ways, I probably needed to be humbled in that regard. But yeah, my goal is to really, Nick, I'm going to be totally honest here, it's to figure out what my new goals are. I think I've really struggled to do that. And The only thing I've been able, and this may sound cheesy, but it's the only thing I've really been able to define thus far that I felt comfortable saying. And it's when people hear my name, and I think about this in reference to my kids. When my children are older and they're in town and they're interacting with other people in the community, and when they find out they're my son or daughter, I want them to feel pride because of the way people think about their father, that they respect him, they find him to be an honest man, someone who was not selfish. And, so I think of how would I want to be described, and what are the actions I would take today to emulate those behaviors, to earn those descriptions. Because, every day we're not perfect, and it's easy to, I don't know. Parenting's a lifelong guilt trip. Every day I think we lay in bed and think about, I could have handled these 10 things way better. You never do it perfect. But I think it's the same thing with life. It's never going to go perfect. It's never going to go according to plan. But you can hold yourself accountable to, and for me, it's just, that's my natural motivator. It's the way other people see me. I've always been very cognizant of wanting to be someone they respected. I never needed money, but I did want to earn trust and respect. To me, those were the two things that if you earn those, no one could really take them from you except you. You could be the only one to lose those. Yeah. And it's the greatest gift someone could give you, right? Truly trust you or truly respect your character. And so, that's the only way I can quantify that, or that's the only goal I have today. That it's a little too big picture still. I need to break it down a little more to make it a little more actionable. But that's kind of what I think about when I approach how I conduct my personal life, my business life, and I think about, is anything I'm doing, if it was printed up in the paper tomorrow, would I be embarrassed or ashamed of that? Well, then that might be a good indication that that might not be the best answer. That seems like a pretty easy barometer to just quickly check yourself and go, okay, am I stuck in my own perspective, or would someone else maybe look at this differently and have a different opinion? I think that's a pretty easy way to kind of hold yourself accountable and maintain integrity.
Yeah.
And another, I was a little bit lucky, me being a black and white thinker. Look, I went to a military college that was very, if you lie, cheat, or steal, you will be expelled. Doesn't matter how big or small the lie is. Doesn't matter if you signed in the wrong sign-in time on the sign-in sheet. Automatic expulsion. Or tolerate those that do. So also, if someone knew about it and didn't bring you to the honor court, they would be expelled as well. And that sounds very harsh, but what it did is it quickly set up these hard and fast rules for what I would allow, how I would allow myself to behave and how I wouldn't. And I think oftentimes we keep approaching that line and then think, oh, well, that wasn't that bad, so maybe we just push it a little further. And then you realize people are all the way down here and they don't even realize it.
Right.
And so I've just said it's always easier to just have a hard and fast line and go, that's just an automatic no under any circumstance. Yeah. That's just part of my integrity. I don't care if it doesn't hurt anybody. I don't care if it benefits me. It's just, and oftentimes these are gray areas. There's really not a right or wrong, but in my mind, it's a lot easier to not be tempted to do it than to risk the temptation. I don't know that I trust myself enough to have the temptation and continually hold steadfast. So I'd rather just avoid it altogether.
Yeah. Yeah. And I think that if we all lived that way, the world would be a much, much better place. So I think that having those driving values of being trusted, being respected, living with that kind of integrity, that's an amazing place to leave it. I think you've just love the value that you've given to us and to our audience here. For anybody that does want to connect with you, what's the best way for them to either learn more about New South Transaction Advisory or to get in touch with you? Yeah,
so my website, newsouthaadvisory.com. that has contact links. You submit an inquiry through there. I get it directly, and I pride myself on following up. And look, I never view a conversation as a wasted conversation. I'll take an hour to listen to anybody, because usually I learn something, even if it's not going to end up in an engagement. I just enjoy hearing different perspectives and different success stories and different failures. And, I would say, frankly, I probably end up engaging about 40% of my initial calls. And that's because I'm not going to be the right fit for everybody, or my solution might not be the best solution for them, but I'll help you arrive at that conclusion. And frankly, that's how I think I've built trust amongst the other professional advisors in the community, is they trust I won't oversell somebody. That if I don't think it's the right fit, I'm not going to push that and try and fit them into the box. I'll give them my true, honest feedback. And sometimes that is a transaction that ends up in engagement. But more often than not, I'm really setting them up with someone else who's a better fit for what they need. Because it might not be a transaction. It might be an executive search. It might be coaching. But I enjoy that process.
Perfect. Well, yeah, that I will definitely include the link to New South Advisory. So listeners, if you do want to touch base with James, do check that out. James, thank you so much, man. I've been so grateful for this conversation and time to get to know you. So good. Really,
Nick, thanks for inviting me. I'm glad we connected. I feel like it was just a carryover of our first conversation.
Yeah. Absolutely. Well, good. Well, we'll make the conversation. We're going to keep it going. We'll have you on again. Thank you, listeners, as always, for hanging out with us on this journey. We'll be back next week with another episode. Until then, see you next time.